Today we're looking at mergers and acquisitions. I'm joined by Professor Scott Moeller, Director of the M&A Research Centre here at Cass, and Anna Faelten, Deputy Director, to discuss their 2013 M&A Attractiveness Index. Now, first of all, what does the index actually measure?
The index measures countries' maturity for M&A purposes. It's something we have devised together with our research partners, Ardian, Suisse, and Ernst. This is the this is actually the third year we're producing the index, but we have 6 years worth of data historically. We rank 131 countries worldwide, so we cover most countries. And we measure country-level data points which we have designed specifically or chosen specifically to measure both sustainability and attractiveness for M&A purposes. And those includes regulatory and political factors, economic, financial factors, and technology or innovation.
And probably important to note is that it looks at how attractive a country is either for domestic activity, that is, activity taking place within the country, or investment into the country. What we're not looking at is whether a country is actually where its ranking is in terms of outward investment.
And what countries are at the top of the index?
When we look at the top 10, the United States is on top, not surprisingly. South Korea second, Singapore third. Asia has a really, really good representation, therefore, in the top 10. The United Kingdom comes in fourth. Just to round out the list, it goes Hong Kong, Germany, Canada, France, Netherlands, and China. Good representation for Asia, not as good as it has been for Europe, and obviously the ones that you expect from North America, they're up in the top 10.
I see that some African countries have risen significantly. Why is that?
Well, the African nations have risen because of a number of factors. Importantly, perhaps just to note, South Africa was one of the fastest risers. It's now 42nd. Mozambique and Kenya, two other fast risers into the business. Why? What do you...
Well, from the data point of view, it's because of improvement in regulatory and political factors. So although the region, if you compare it to many other regions, still will be viewed as unstable, I guess, compared to others, there are some countries that see improvement in that area, and I think as a whole, you know, we are moving up as opposed to down. So I think that's been a driver for most of the ones that have been on a high rises. Clearly, some countries are still lagging, but certainly for South Africa and Kenya, and I think also Mozambique, that was one of the major factors for why it's been driven and gone up so significantly in the last year and 5 years.
And what countries have fallen in the index?
Two of the countries that have fallen, which I think might surprise many people, are Germany and Japan. Germany still in the top 10, Japan having dropped out of the top 10. Again, remembering that this is a study which looks at inward investment, not the outward investment. So it means that both Germany and Japan have become less attractive for countries to invest into or their own domestic activity.
And I think another one to mention is also Finland, which is quite interesting. That they have fallen significantly, 9th place, I think, in the last 5 years. And actually that's driven a lot by their fall in innovation and technology improvements. And when obviously Nokia is a good example for a case study on that front.
Exactly.
So you now have 6 years worth of data. What trends are you seeing?
I think what has been interesting in the last sort of 5 years, so covering the crisis, is because the crisis is very much driven by Western Europe and North America. We did see a sort of increase relatively in the type, both inward and domestic actually activity in a lot of the more emerging markets. So for a few years we saw the sort of relative pie of M&A going up in those regions. Now in the last year, because we have seen a bit of a turnaround in the M&A market, certainly in the US, but we're seeing some signs also in Europe, you know, again, it's sort of relatively falling. And I think one of the things that is going to be really interesting over the next few years is seeing if the value activity, so to speak, is also going to pick up in the emerging markets. Because, you know, there is now, certainly in China and a lot of Asia, a very robust domestic market. You know, companies are still investing and obviously looking for growth in these markets. But we'll see, and you know, the real sort of trick for becoming a mature M&A market is also seeing the larger type deals happening. And you know, some countries we're seeing that, but most countries that's still to come.
There's another trend too, and that is that when we first look at the data from 6 years ago, you see that there's a much, much wider dispersion from those at the top and those down at the very bottom. What's happening is those at the bottom, not perhaps those at the very, very bottom, which remain quite unattractive, but those that are more in the middle level are rising up and the countries at the top are pretty much staying where they are in terms of attractiveness. So we're seeing a much larger group of countries which actually look from a inward investment basis or domestic activity basis much more attractive.
And how do you expect people to use the index?
Well, I would hope that people would look at this research and say, okay, we want to make some investments outside of our own country. Where, in fact, should we be looking? Now, most companies, when they go out and they look for an acquisition, have an idea already where they want to be. But perhaps as they're beginning to look at new places to invest in, this will be a very, very good tool for them to be able to identify some places that they might not have thought about before.
Thank you both for your time.
Thank you.
Thank you.